Yo guys, welcome to episode 1 of a new funded challenge because we did below the 10k count. So I'm gonna name this video just I blew my funded account. So most likely there'll be some new viewers here, and just to explain the context to you guys, I was trading a variation of my current strategy on a different session that had a very low win rate, which was about 30% win rate with 1 to 3 fixed risk to reward, and I thought the win rate would be higher, but after backtesting that exact strategy for 2 years, like 2 years worth of time on FX Replay, I found that those backtesting results was the exact same on my funded challenge and was the exact same on my data. So that strategy for that session timing was just not viable. So yeah, you guys can run that calculation. 30% win rate on 1 to 3 fixed risk to reward. It's just barely on the verge of profitable, and then you add in all like slippages and things like that and human error. It's basically not profitable. So after I realized that, I did some vigorous backtesting for about 1 to 2 weeks, literally day and night, every single day, backtesting. And I have been backtesting pretty much since I started trading as well. I'll go through months at a time where I'm just vigorously backtesting non-stop to find a profitable edge. And right now is actually the first time I've actually found something somewhat very profitable, actually, not decently profitable, like literally very profitable. It's about 50 to 60% win rate on JPY for it's not fixed risk to reward, but the average risk to reward is about 2 to 2.5. And then on my US 30, if I trade an average risk to reward of 1 to 2 to 2.5, it's also about 50 to 60% win rate. But if I trade 1 to 3 fixed risk to reward on US 30 with this strategy during that session, it's about 40% win rate. And this is well over a year's worth of data, about like over 200 trades now. So I have a much more mechanical variation of my strategy that has a lot better statistics. So yeah, in conclusion, this would just basically mean that it'll be a lot easier for me to follow, and it is a much better edge in terms of actually providing consistently profitable results. So that's kind of just the context. The reason I blew that account is because I was already about 4 to 6% in drawdown from trading the previous version of my strategy with about 30% win rate. So we were already in drawdown from that, and then when I switched to a variation of my strategy, which I had gotten funded with at the start of the year and I was doing very well with, the only reason I stopped trading it is because we had entered like bad conditions for that strategy for about like 2-3 months, which after backtesting a long period of data, I found is very normal. There will be maybe 1 month or 2 months in a row, sometimes 3 months in a row, where there won't be profitable returns, but after that it'll continue at about like 4 to 6% consistent returns. But at that time I didn't really have the knowledge or market experience or kind of education to understand this, and I thought maybe my strategy just didn't work, so that's why I stopped trading that. But now I'm back to it, and then I had about like 3-4 trades buffer left until I blew that account. And I did make mistakes with those trades because last week I was very sick, and those 4 trades I had left I took while I was sick, which in hindsight was probably not a good idea because I did make some silly mistakes that I had forgotten about from that previous version of my strategy, because that previous version of my strategy had involved retracements. So because I bought a new account now. Before I was trading on a 10k challenge, now I'm trading on a 25k challenge, and so yeah, I don't have those trades of data anymore because they were on my trade locker, but I'll basically show you guys a mistake I was making. So say this is a high time frame breaker structure range. When this 1 hour, 4 hour breaker structure high gets taken, I will usually trade a retracement. Let me fix that actually. I'll normally trade a retracement down into an area where like either the 50% range or where there's a level of internal range liquidity. But the mistake I made with a lot of those trades, because I was taking them from my phone, because the whole week I was sick, I didn't go on my computer, so I was just taking trades on my phone, and I wasn't looking at the high time frame much, and I would be trying to catch retracements like this. Like once price has retraced, it hasn't quite touched the halfway range or swept the level of liquidity, but what did happen was that price turned bullish. We shifted bullish and we started moving like this, and what I'd be trying to do, I'd be trying to short off these zones like this, like for change of character, fake breaker structure zones like that. And what I should have realized is that in my rules, I actually have this in my rules, that no matter where price retraces into the range, even if it retraces down here, even like the tiniest bit, not even close to the 50% range, if it turns bullish again, like here, I don't keep trading retracements. I just don't trade at all in that condition. I either wait for price to sweep a decent level in the range, and then I trade the continuation to take out this high, or if we don't get that and price changes bullish very high in the range, I just avoid trading. And so that was a mistake I basically made with those 4 trades while I was sick, and that's what led us to blowing the account. And you might be wondering, is it the best idea to buy another challenge right after blowing an account? And normally I would say no. I would say if you blow a challenge, you need to go back and you need to review your data, do some more testing, do some more journaling, some live trade journaling, demo trade journaling, and backtesting, and collect a lot more data before you decide to buy another challenge, and have a long amount of trades, a high sample number of trades before you go back into a challenge. And the reason I went straight back into another challenge is because I had done that just prior to losing my other account, and that account was already very much in drawdown from trading a worse version of this strategy. And now this one is more mechanical. I've collected loads of data on a much more profitable edge, on a much larger sample size over a much longer period of time. So this sample size is well over 200 trades, almost 300 trades, and it is over a year, about a year and a half worth of data across JUB, JPY, and US 30. So that's why I'm very confident in taking another challenge. Also because this kind of new profitable edge that I'm trading, not really new, but just what I was trading before, it is more mechanical. Back then when I was trading, when I got funded, it was very discretionary because I had a very discretionary way of viewing my high time frame range. For example, in SMC, if you're kind of a beginner, if you don't know what you're doing, you go into the high time frame, you can see multiple ranges everywhere. We're trading bullish here, and you'll be looking for a POI here, POI here, POI here. And then when we trade bearish, you'll be looking for a POI of here, there's a POI here, demand here, and there'll be your supply here, and the price will come up and you don't know whether to trade this supply here, and you get reactions of supplies like you do here, but you'll just continue bullish. So that's a big problem I had, was a kind of like a discretionary bias, which would lead me to having some profitable periods and then some unprofitable period. But I fixed that through like the amount of backtesting I did. I found a more mechanical way to view my higher time frame, and it's taken me a long time to find that because I tested many different ways of looking at the high time frame. I've looked at using just 1 hour, using just 4 hour, using 1 hour and 4 hour, using 4 hour and daily, using 1 hour and daily, using 4 hour and weekly, using weekly, daily, 4 hour and 1 hour. Like, you guys don't understand how many months I've spent backtesting just trying to find a mechanical high time frame bias that works. And what I've found that works now is basically 1 hour swing structure with my 5 minute mid time frame, but the way I validate that 1 minute swing structure, so I'm not just taking every single 1 hour structure that comes up, which was the problem I was facing. If I choose a time frame, I would get confused on whether it was a valid range I should use or not. So basically now I use a 1 hour string structure range, and the way I validate that is if the range is also valid on the 4 hour. So this would be valid here because there was a 1 candle pullback. So if there's a 1 candle pullback and there's enough space here for a clear breaker structure as well in the 4 hour, that means it's valid on the 1 hour for me. And I backtested that over like almost 300 trades now. And it works very well, very well. I'll actually show you guys the results if you guys want. Let me pull up the FX replay actually. So you guys know I'm not bullshitting, I'm not waffling, I'm not just jumping into another challenge. I've actually done the work, I've done a lot of work, and yeah. So yeah, we're at another funny camera angle today because my tripod hasn't arrived yet and my old one broke. That's why I've been kind of like not keen on making videos because I can't find a place to put my phone. So I'm just pulling up my backtesting results here. And so mine is US 30, 2023 and 2024, GJ London 2024 and GJ London 2022. So if we go 2022, you guys will see. And this one here, 94 trades. And we have 1, 2, 3, 4, 5, 6, 7, 8 months of data. Consistent, very nice, consistent results. If it's from the initial balance, which is what it'll be when we're trading on prop firms, we can see we have about 5 to 6%, sometimes 9% gains per month, which is very good. If you're able to do that, you're basically profitable. And then we can go on our US 30, and on our US 30 we also have very good results. And then here, another 174 trades, almost 40% win rate, and yeah, also very good results, consistently profitable results. Yeah, the start of 2024 wasn't too great, but I think that's just because I was backtesting too much in one session. I'm not supposed to do that because my backtesting results do like significantly decrease if I just backtest too long in one seeding. So you saw with those GJ London results before, that's me backtesting only 1 month per day, or even 1 month every 2-3 days. And we go back to GJ London 2024. And I think there's like, there's not a lot of trades in this one. Yeah, 12 trades in 1 month. But as you can see, GJ is a lot more consistent. US 30 will have some big ups and then some slow months where we only lose about 1 or 2%, or make nothing, just make 0%. And yeah, so that's basically the reasons why I've gone into a 25k challenge. And now we will go through the trades I've taken so far on the 25k. So I've taken 2 trades, both were losses, unfortunately. It's not the best start. 1 loss was here. This is a forward test. I didn't take this because it's out of my session timing. So this is just being forward tested. This trade I did take. This was a valid trade. This was a trade that's worked out. That works out many times across all my backtesting, but it just didn't work out. And the other trade was yesterday on US 30, which we actually just got quite unlucky because we got the range correct. And price was trending very nicely. I would have set break even around here, mainly because there was high impact news coming up and we were very close to TP. So I would have set break even, but unfortunately after I placed the limit order on this trade, I did fall asleep. It was about 8 PM. I went to lane bet. I placed the trade around here. Price came down and tagged me in around 8 PM. I was already in bed. I was sleeping. I was just so tired. I went to lay in bed for 1 second. I fell asleep. And then I woke up at like 11:30 and I saw like price just took me out right before it swept the high that I was looking for it to sweep. So this one was more so just unlucky. Today's was also just pretty unlucky as well. We'll look at our high time frame range here. We have a 4 hour valid breaker structure, 1 hour breaker structure as well. Waiting for price to retrace within the 50% range. We got that, and then we had very nice 5-minute structure upwards. So this high became my draw on liquidity. We had 5-minute change in character, breaker structure, retraced into the extreme, had a very nice 5-minute type 1 and 1 minute shift up. We placed the limit order here, but as soon as it tagged in, it went straight down. And yeah, it looks like we're just going to be further inducement. we are further inducement for whenever price is going to react here and continue up here, if that's what is going to end up happening. And this forward test loss as well, I didn't expect this to win because it's out of our session time, but I just had it there for the sake of collecting data. So yeah, we are 1% down. My risk management strategy going into this account is going to be, we're only going to risk 0.5% until we're over 2%. So that way it's not going to take us months and loads of time to pass the account, but that way we shouldn't blow the account either, because the maximum drawdown is 8%. If we're risking 0.5%, that means we have 16 losses. We have 16 losses. We will absolutely not lose 16 trades in a row under any conditions. And yeah, it'll be good because once I'm above the 2% profit and I start risking 1%, it'll be a lot quicker until we pass the account. And then if for any reason we lose those trades and we go below, it will be very slow until we lose the account. So this is a risk management strategy I should have been doing from the start. I really like it. I hadn't thought of it before. I kind of saw it from a YouTuber the other day and I'm thinking that's actually that's a very smart idea to do for prop firms. So yeah, that is what I'm going to be doing now. Thank you guys for watching. I guess this was episode 1. This is going to be episode 1 of the 25k challenge. And I will see you guys next time. Bye-bye.